Hello and welcome to Wednesday webinar. I'm Julia Hartman from the Bantax National Accountants Group, and tonight I have for you some very interesting before and after pictures of what I consider to be a substantial renovation. If the owner of this property was to sell it now, the ATO would be looking to collect GST off them and they would not be entitled to the 50% CGT discount because they obviously bought it with the intention of renovating and selling for a profit, so they are in business. This unit is solid and has a beautiful view. Just look at the location, but it was damp, smelly and miserable inside with an inconvenient floor plan. The trap is a substantially renovated property is treated like a new property for GST purposes. This could mean the owner will have to pay GST when they sell it. So let's look at what a substantial renovation is. GSTR 2003/3 is the ATO ruling on this. It states that a substantial renovation does not have to be structural, but merely cosmetic changes would not be considered substantial. Further, to be substantial, the renovation would need to affect every room in the house. Painting the whole house inside and out is only cosmetic. Even combining this with replacing the kitchen and the bathroom would not amount to a substantial renovation. On the other hand, replacing the floorboards, electrical wiring or plumbing in a property may be substantial because it usually affects every room in the house and is not merely cosmetic. Moving or replacing the walls can have the same effect, but only if enough walls are changed that most of the rooms in the house are affected. A combination of various forms of non-cosmetic changes that combined manage to affect every room in the house will be a substantial renovation. Cosmetic work such as painting, sanding floors, changing fittings, curtains and carpet do not in themselves amount to a substantial renovation, even if they affect every room. Further, cosmetic changes to every room and substantial changes to only a few of the rooms would not amount to a substantial renovation because the cosmetic changes are disregarded in considering if all the rooms have been affected. This unit was completely gutted, even internal walls were removed. The floor tiles were removed and replaced with tongue and groove timber floors. The bathroom was completely stripped, their new floor and wall tiles and a bathtub were installed. Also, parts of the bathroom wall was moved. The kitchen was completely replaced and moved to a different location. The wall between the bedroom and the lounge was also moved and is now mainly made up of shutters to give a more spacious appearance. It is certainly what the ATO would consider a substantial renovation because every room was changed, even though the only external changes were plant and equipment such as air conditioners, a hot water system and barbecue range hood. Interestingly, according to GSTR 2003/3 at paragraph 67, you can extend a house, but as long as you only do cosmetic changes to the original part of the house, it would not be considered a substantial renovation. So now on to the question of whether the owner of this property is required to be registered for GST. If they did the renovation to then sell the property for a profit, then they are in business and the unit is part of their normal turnover. You have to register for GST if your turnover of supplies that are subject to GST exceeds $75,000. So the next question is whether the sale is subject to GST. Now, if the owner didn't renovate this property to sell, say they just had an unexpected change in circumstances, then GST doesn't apply, but the onus of proof rests with the owner. Ideally, keep the property as a rental for at least 5 continuous years, and then GST won't apply at all because it is no longer a new property. In this example, the owner renovated to live in, so the project is not part of an enterprise for GST purposes. But again, the onus of proof is on the taxpayer to prove that it was not their intention to profit when they sell. Selling soon after the renovation is completed will make this very difficult. If you are in this position, don't think you will slip under the ATO radar. The Titles Office report all sales to the ATO. You need to know where you stand before you sell so that if GST does apply, you can put a margin scheme clause in the contract, especially in the situation of substantial renovations. If you don't have a margin scheme clause in the contract, then you have to pay the ATO 1/11 of the sale price. If you put a margin scheme clause in and the buyer agrees, then you only have to pay GST on 1/11 of the difference between the price you originally paid for the property and the selling price. Big savings. Also consider that if GST does apply, you are entitled to claim the GST back on your renovation costs. This becomes a lot more difficult years down the track when the ATO come knocking. There is another tax problem. If you buy a property to renovate and sell, even if you don't do substantial renovations and even if you live in the property while you're renovating it, if you buy with the primary purpose of a profit-making goal, then you are in business, a profit-making venture, so the profit is taxed as normal income, no main residence exemption or 50% CGT discount. If you're actually in the building trade, you will have two things working against you. Firstly, it will be hard to argue that you did not build it for resale. For example, case R51 in 1984 was where a builder was found to have built a block of flats with the intention of profit making from their resale, even though the flats were not sold until 6 years after they were built. Secondly, if you own the property in your own name and you are in business as a sole trader, you are probably already registered for GST anyway. If you are renovating and going to sell the property, please make sure you speak to your accountant, preferably a band tax accountant, before you even sign the contract to buy. Thank you for staying through to the end. Hope to see you next week.